Hello, today is Thursday the 19th of June, which is a national holiday in the United States. It's Juneteenth, which used to be called, I think, Emancipation Day, and so markets are closed. That means quite a lot of drivers of crypto liquidity, like the ETF in and out flows and so on, will be gone, and therefore we will have kind of lower liquidity and potentially more volatility than usual. I just want to point out where we are in markets because we are sitting on kind of quite important support. I'm going to start with the S&P because this is quite an important support level. Let's take that away. We obviously have this is a weekly chart, and obviously this is the second week of kind of sideways at these highs, and for me this is quite an important level and makes a fib pattern. So if I put in fib retrace levels from the high in December to this low that we made on the 7th of April, or in the beginning of April, and we put in all of the fib levels, some more fib levels, I'm going to put in this 886 fib level. For people who don't use the 886 number quite a lot, if the 786 fib is the square root of 61.8, then the 886 is the square root of 786. And it's quite a common fib, as markets, particularly in more volatile markets. So one thing about when you draw fib patterns, if you reverse an 886 fib level and you reverse the fib retrace level underneath it, which in this case at 6,000 or 5,987 is the 786 fib level, the pattern you make, usually the first target is back to the 50% level in the middle of this entire range. So we can say that if we get a daily close or weekly close underneath 5,987, we will at minimum see a pullback down to 5,585, which I think is a 9% drop from the highs, which is not insignificant. And the second target you make tends to be, if this is a bigger ABC, tends to be a back test of this 236 fib level down here, where this swing is 61.8 of this first swing. So if I measure from this high to low, that puts us down here at 5,000, kind of around 5,200 to 5,250. So back testing basically this weekly 200 moving average, which has been really important support for the S&P for quite some time. This is E-mini futures we're looking at. So these numbers are E-mini futures numbers, and the key level we're watching is 5,987. In terms of trend trading, if we hold this level, we're still going higher and we're likely to retest the highs, and then we see what happens here. I think the threat of war or war expanding in the Middle East might be a good trigger. Nobody's talking about tariffs at the moment this week. There are nuclear wars, obviously far more important. But this is a key level. If we see this will be, at least a 9% drop. This is the first target, and potentially this would be 15% if we come down here. So potentially a much bigger drop if we close underneath this 5,987 level in the E-mini futures. What does this mean for Bitcoin? Let's take a look at where ETH is my favorite chart at the moment. And I would say in Bitcoin, we're kind of in the middle of this sideways range, holding above the highs from December and January, barely kind of going sideways. Potentially, this therefore becomes a bigger kind of ABC correction. For now, though, this daily 50 moving average has been pretty important support. And if like the S&P, we're doing a bigger three-wave correction here, if I measure from this high to this low, this support that we have been holding basically since the end of last week, which is at 103,500, is where this swing is 61.8 of this first swing. If that breaks, we're likely to do a bigger three-wave correction at least, which would mean back down testing 99,000, and underneath there we could actually see a bigger correction, because this then becomes a bigger ABC. And if we do that and we measure from this high to low, then we come all the way back here to this 89,000 level here in the middle of this sideways range as a minimum target. So we're sitting on pretty key support here, and there is the potential that if it goes, we see a kind of dramatic move lower. Whenever you kind of break this daily 50 moving average, it tends to see quite a dramatic move. Now, what would that trigger? You know, we could argue that you know, this is what's going to happen if the United States joins the war in the Middle East. I'm not sure that the United States isn't already, you know, fully involved or behind it anyway. And it could just be the normal patterns of markets, because we have options expiration on Friday, and quite often you will get pinned. You'll go sideways at a price as you go into options expiration, and then you'll see a kind of bigger move afterwards. This Bitcoin options expiration, normally the options expiration in the bigger market doesn't affect Bitcoin, but the advent of CME futures options has exploded. They're really, really popular, and so you know, even things that other MicroStrategy options, for example, they are all in the mix now. And so this kind of mid-month options expiration does now affect crypto more and more, whereas the spot Bitcoin options normally, as you know, expire on the last Friday of the month. So we could see some volatility into the end of the week if this support goes. I'm just saying this is where we go and where we would go lower. Now, altcoins have been selling for a while, so I'm not entirely sure that you know, that they're going to be that affected, you know, quite, you know, especially on the decentralized exchanges. But it's certainly going to be a bit of a dampener on mood if we see some pretty dramatic losses. So pretty key support that we've been perched on all month in Bitcoin at this daily 50 moving average, and a close underneath 103,500 sets us up for a retest of 99,000, maybe 95,000, and maybe back to the middle of this bigger range down at 90,000. I'm not saying the bull market's over. I'm not saying this is the end of the world. I'm just saying that this whole swing that we have been in since April, which was very fast and really huge in Bitcoin, when you think we went from 77,000 to 112,000 in 6 weeks, so it wouldn't be weird to retrace half of it before we continue higher or try a next attempt at a turn higher. So pretty key support. For me, I think that the upside looks much better in ETH. So ETH is the one that I'm stalking. And when I look at ETH, we can talk about the fib patterns here. But from the highs here in December to the lows that we made in April, if we do the same pattern here, we've reversed at a 50% mark. And when you do that, so if we talk about fib patterns for ETH, when you reverse at a 50% retrace, mean reverting markets tend to keep mean reverting, and so we are likely to see a 50%. This would mean this whole swing is over. We'd like to see a 50% from this high to low. So if we break down from this channel in ETH, the place where I'm going to be backing up the truck for ETH is going to be a 50% retrace here, which would be 2,131 if we lose this daily 50 moving average. Now, am I predicting that that's going to happen? No, I'm actually thinking that this may be a little bit of a parallel channel here. I'll prove it. I'll draw it as a parallel channel like this. So if we connect these lows, these highs, you can see quite often, so third touches of trend lines and horizontal lines, we need to line this up, very often are false breakouts, and then you quite often see you test it on the other side, and you can expect third touch down here. I would expect this initially to be a false breakout, and if we get underneath it and then it becomes resistance, obviously we're going to do that bigger pullback. But if we look at where we are and where this low here, which is around 2,400 in ETH, this would be the daily 50 moving average, pretty important support and resistance, as you can see previously. And so this is where I'm looking for support. So we could see a nasty little sharp false breakdown here, but if it turns into a real breakdown, because we're making this 50% pattern in ETH, that's where my target would be, down here, 2,131. I wouldn't be surprised to see a false breakdown or a retest of these lows horizontally. So if this is going to be a false breakdown with a sharp bounce, it would be this horizontal low here, 2,300. I would like to see retested. So whenever you see moving averages, and these are daily moving averages here in ETH, all bunched up like this, when you break out of them, you tend to see quite a violent move. And if you're bullish, a false breakdown would be the kind of most violent, best looking pattern you can expect. So I'm just saying that we're sitting on pretty important support in quite a lot of markets. So watch out how the end of this week goes, because everything seems really tense at the moment.